Hi and welcome to the Market Alert for Friday, the 29th of January 2020. So where to start? Well, it's incredibly difficult to distill everything down into a 10-minute video. So what I'm going to do is to go through just give a sort of an overview of what happened yesterday and look more at the German DAX and Wall Street and a quick look at the silver market. But I am going to recommend that you have a look at Mike Maloney's video. First GameStop, next silver. Will this be the biggest short squeeze in history? Because everything's talking about short squeeze at the moment with GameStop. But have a look at this video. He explains everything, what the Reddit community are actually doing in actually finding the most shorted stocks and then buying. This is the small people buying and then forcing the prices higher. And that's what we're seeing. It even made it to the Daily Mail yesterday. But Robinhood, obviously part of the establishment, is not happy about this, and they have been forced selling individuals' stocks, not allowing them to trade them, but the only option on the app is to liquidate the position. So have a look through this as well. There's some interesting headlines here as well, as you can see there. Basically what's happened is all of the Reddit community social network have got together and they're finding the most shorted stocks by hedge funds, and what they're all doing en masse is going in and buying and forcing the hedge funds that are short the stock. They have to then go and find the stock of other institutions in order to close those positions or to cover those positions, and it's causing the share price to move to the upside. And of course the ultimate squeeze is silver. It's the most manipulated market in the world. There's no doubts about that, and you can see this here as this Reddit message was sent out yesterday. And the idea is to get everybody to force the price of silver to the upside. But like I say, watch Mike's video on this. It's 24 minutes and worth every single minute of it as well. So that's what was happening yesterday. And then of course what they did is, if we have a look through this, you can see that GameStop spikes after brokers Webull unrestricts traders. There was a lot of restrictions yesterday afternoon, as we'll have a look at in a moment. GameStop shares are collapsing. Pelosi says she will be reviewing the issue. Yeah, great, that's all you need. And retail brokers suffer another coordinated outage as short squeeze surge spreads. They didn't say it was well coordinated, as it says there, to stop those who were the small people from profiteering. We have some bad news for GameStop shorts, which I thought was really good, and it's this bit. The real short covering hasn't really got started yet, and we're going to see a lot of this, I think, going forward. I mean, how sustainable it is, well, who knows? But I think what you're going to find is the big banks and everything are going to come in and send the stock market lower to try and crush these Robinhood traders, so that they get out of the way, and then they'll buy back all of those shares at a cheaper price. That's how it works. You know, the small man is the fodder. They are the sheep, and the sacrificial sheep for the big boys to actually buy as well. So it's all about this yesterday. And they also, GME as well saw 75 ping after the raises lost after liquidity constrained Robinhood lifts trading ban. The firm has tapped at least several $100 million. So yeah, it just goes on. Washington demands hearings on manipulation and state of stock market. It's just incredible, isn't it? You just can't make this crap up. Washington is fully behind the manipulation of the stock market, but as soon as the people hold the power, then as soon as the people get involved, then it's their fault and they're ruining the game, and it's not going to be allowed. So be careful what legal legislation that they may put in place as well. We could all end up being banned from trading at some point. Is the Reddit rebellion about to descend on the precious metals? This shot up yesterday. And on the mining stocks, First Majestic, Epic gold market to follow, Epic stock market bubble. I'd put a question mark after this, as they've done there. Again, it depends whether they're allowed to. To take on the biggest short in the world, which is JP Morgan, is going to be a tough one. I mean, it can be done if there's enough, but what happens once you've achieved this? Does silver then just fall back to where it is now? Who knows? So yeah, and I mean, we're in this situation as far as the metals are concerned, Nixon closed the gold window, and all I got was this lousy national debt. Talk about national debt, global debt, some 270 trillion now. And we're seeing the end game here now, where people have had enough as well, with all of these institutions, the manipulation by the government, and they're complicit in it. It's called QE. And each time they pump it into the markets through M2 or M1, the markets go up. So, you know, it's as soon as they start to lose, it's a different ball game, isn't it? Anyway, implied volatility for yesterday, 21 dropping because the market made a huge recovery, of course, as we got to lunchtime, but we're still red, and for me there's still plenty on the downside as well. So I'm going to cover quickly the Dow, and we can see that yesterday the market traded down to the 89 in the Dow, 89% retracement from here to here, and they bought back, and you can see there, and that's a short covering again and profit taking, bringing the market back up, but overnight prices are looking a bit weak, to say the least, heading back down towards the 78% retracement there as well. So like I say, if you want to crush the small people, you're going to have to send the stock market to the downside. So all of the short covering, where it's everybody's buying, they will hammer them to the downside so that they get out of the position. So the volatility is likely to pick up over the next couple of days. Let's have a look at the daily chart of the DAX first, and again you can see this trading down to the 1332. I'm going to cover this in just a moment. Like I say, this is going to be a really fast-paced review in part 2 this morning, because like I say, if you want the full details, you want to see Mike Maloney's video with regards to this. I'm just having a look at what we can expect today in this alert, because that's what we're going to be trading. So again, you can see that the DAX has been moved lower overnight. And let me just mark up here. Let's just see if we've got a from here to here. That's going to move it to the upside. Let's have a look. No, it's we are. This is where we are. The 78% and that 332 area. This is where it's going to be important, but it's got to take out yesterday's low in order to do this. So that's where we are with this. And what I'm going to do though is because of this big bar, to try and get some idea on the downside, I'm just going to click twice down here on the low of this bar, and just to take the range of this bar and also see where the fibs come into play. If prices are forced to the downside, you can expect, as we've seen here, between 62 and 78. So if we take out that 78, then we go down to 89, which is 353, and then the low, which ties in with this low over here as well, that 332, where the market found support yesterday. But it looks like they're already starting to move the market to the upside. So let's just have a look overnight and see where we are. So prices have opened. They moved down sharply, way below the 200 and the DP, which we can see there, but all of a sudden we're starting to see prices move to the upside. The futures have just opened. I'm late this morning because there's so much to try and read and get an idea of what's going on for this morning. So at the moment they're trying to bring the market back. Now we're back above the 200 MA, got the DP here, so we're moving to the upside, and I've listed all of the fibs on the upside from this high to this low. These are the major swing fibs, but if you wanted to, you can also add these in from here or here. I'll just go with this one here. So from this high to this low, and then you'll see a doubling up of the fibs as well. All of these areas will cause a resistance if the market actually takes out yesterday's high, but it's got to do this first in order to move to this crucial area. To take out yesterday's high before those other fibs become pertinent and relevant to the trading there. Now, news today. I don't know whether the market's going to be affected by news or not. I'm going to have to go eyeball this and tell you which ones that are worth looking at as well, because they have downgraded a lot of these news items that we've spoken about already this week. We've already had the French spending. We've got the German prelim. That's tentative though, which would be at 7 a.m. and there's nothing on that at the moment. I'm just going to have a quick look through this because it's so difficult to see which ones now that they've downgraded it. I think it's just a case of just keep an eye on these. But you'll be familiar with a lot like Chicago PMI is normally medium. Pending home sales has been high, and now it's low. And these are also as well, the UOM are normally medium impact as well. So, keep an eye on these, just have a look, and you'll be able to gauge. I'm not saying that you should get out of the market. I think this is probably one of the reasons they've been downgraded, because they've had such a minimum impact on the markets when they've been released over the last few months, because of more important things like manipulating the prices through QE and additional funding from the government, that really the economic news is no big deal. It's more about virus news, etc., and vaccination. So, like I say, keep an eye on them. Low impact news items tend not to have too much of an issue in the market, but unless they want to use it to manipulate prices even more. Right, that's the end of part one. What I'm going to do is just do a quick run through what we saw yesterday and how important the fibs were in establishing a really good trading strategy in the day, and knowing where all of these finer support and resistance areas are in the market. So yesterday we saw the market moving lower as prices traded down to the close. They didn't get down to the low in the pre-market. The futures market opened. Prices were sitting on the close, and they moved these to the upside. So again, this is really going to be fast, so be warned. We see the market trading sideways. We can see the battle going on here. Lots of volume during the first 20 minutes or so, really trying to figure out which way to send this market, and eventually the market breaks to the downside, which is what we see there. So the first thing I'm doing now is looking to see what have we got on the downside. Where could we head to? We've got these fibs in place here. The market held at this level because it was trading at the 62% retracement, and that's why we saw this battle going on, because that was a very important area in the daily chart, which you can see there at the 13458. Just go back and that'll give you the BRN there, which is this one, which is the 50 level. So prices find a bit of support there, holding at that 62, and then eventually break and then start moving to the downside. I'll just come back again, because you'll see I'm constantly looking at the daily chart to see where this is likely to continue to move down, using all of the other tools inside of the intraday. You've got the 200 above, the 20 below, and the 5 below as well. So this market's short, it's below all averages. The MDI is short as well with the red, and the market continues to move to the downside. You can see elements of buying pressure coming into the market, and then profit taking, as you see the green bars there, coming back to the low, important. Again, you can see buying here, and you can see this increase in volume down here as well in these 3 bars as they try and hold the market. So now we're down to yesterday's low. Market's trading sideways. We break the low. They try to bring it back, as you can see in this bar here. You can see how it's being held, huge volume in a tiny bar. So they're trying to bring prices back, and then eventually you'll see they succumb to the downside as well. So prices now coming back to the 20 bar moving average. We close above the 20 bar for the 1 bar, and now we start to make our move to the upside. Now I need to wind this back because I want to show you something that's is important around here. It's just finding these areas, which is really difficult. Let me see if I can find it for you. So now you can see we're at the 13332 level. Very important area, because this is where we've got a low to the left, and I've drawn all these lows in. So as the market got down to this level, we start to see some support coming into the market as prices move back to the 20 bar, and then again you're seeing the buying pressure coming into the market here, and this is the end of the down move for the day. The market then just starts to come back, and I'm having a look here, came straight off the 1332, and prices then move to the upside. Now this is the jobless claims, which came out higher than forecast. That trend is starting to move back to the upside as well, so not good there, but the market ignored it. We managed to go straight back above the DP, and just look, not a single close above the 5-bar moving average. The 200 is below, the 20 is above the 200, and the 5 above the 20. And each time the market closes back above the 5-bar moving average, you'll see prices moving back to the upside, although we didn't have any that closed back below. Now we're getting ready for the afternoon session, so prices tend to start to trade sideways, and you can see tiny bars there. We've got a red one on the DP, but again, we're just treading water until the market opens, and immediately we send the market to the upside. Then we get the selling pressure. We've got lots of potential weakness there. They move the market down, but immediately they buy back at the DP level. So prices are destined to move to the upside there, and they just drive the prices. And now I'm just moved there. You'll see what's happened in the daily chart, how we've moved back to the upside. A bit of pressure there, and prices then waiting for the news. We have a potential sell signal. We managed just to grab a few points on this before the news is released, and then you see the news CB leading index. Again, it's not relevant as prices then start to trade in a sideways to higher following the news, once turning green again, and the 5-bar above the 20-bar moving average. And then it just runs out of steam and starts to trade sideways. And this is really weird because the market started to trade in this sideways range, which is very, very strange. And I started to look around to see what was actually going on, because given all of the volatility and the silver price had shot to the upside, all of a sudden we started getting into this sideways move. And I thought, this is really odd, because it shouldn't be doing this. And then when I looked, again, if we see if I can bring this in here. And this started, as we mentioned earlier, there was a coordinated outage, and all the systems were starting to shut down. So the market actually stopped and got into this sideways range while all this was going on. And then to add to it, Germany announced this as well, that the Oxford jab shouldn't be given. So then they were wanting clarification on this. And it just led to the market trading sideways, which caused these 4 trades here to be stopped out. They just didn't know what to do at this point. It was just trying to make a decision. Each attempt to move up failed, and each attempt to move down. And then when everything resumed later on, the market then started to trade again. It was just bizarre. So through that afternoon there, I ended up giving back a lot of profits that were made in the other moves, because of those situations that arose there with the coordinated shutting down of the retail traders in the US, Robinhood traders, and also the vaccination news from Germany, of course, which were trading the German DAX. So until there was clarification on that, the market was in this sort of volatile sideways move where it was just trading up and down. Very strange and very unusual, and thankfully infrequent. Okay, that will do it for this one. This is a lot longer than I wanted it to be. But like I say, also have a look at Mike Maloney's video with regards to GameStop and what could potentially happen with silver. We saw this yesterday. This is the 15-minute chart. Had this explosive move to the upside, and then they tried to slam it back down. And I'm sure JP Morgan are going to attempt to do this. But each time it's been moved to the downside now, it's been less than the previous low. But don't count your chickens on that. I've seen this market trade like this for years, where they'll quite easily just slam it. If need be, they'll come in and sell billions of ounces of the paper, silver or gold in order to do this. So we need to take out this high to the left in silver, this one, and also the high that was made last August when we got to 29.60 per ounce. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.